let's get started. Thank you everyone for joining. As you all know, today is our webinar on FTM portfolios, which is follow the machine portfolios. Many of you are subscribers, and you've seen a lot of chatter about it, and you asked for this webinar, and we also thought we will, talk about all the questions you have, of course, and Akshay will walk us through all of that. But it's great to be back again. We just took one Saturday off last week because it was a long weekend, and but we're very happy to be back today. And of course, this will, you will see the rigor continue just like you have been, and we hope to see all of you. So Akshay, over to you. Everyone, you can do the same things that you have been doing, which is put in your questions on the chat, and we have some announcements to make towards the end around a community platform we have, and we'll talk more about that. So Akshay, over to you.
Thank you so much, Shruti. I hope all of you can see my screen. Welcome, all of you. I can see some very familiar names, and delighted to see them. I've been away for a couple of weeks from the webinar, so partly due to personal reasons and partly due to the bank holiday. But delighted to be back. Before I start, I just want to understand my audience. So Prabal, could you put up the question? I want to know how many of the people on this webinar are existing subscribers of FTM portfolios. Okay. So this is looking like about 50-50, sort of more in favor of people who are not existing subscribers. Okay, thank you, Prabal. So 45% are existing subscribers, 55% are not. So what I'm going to do, I will spend a little bit of time at the beginning to talk about what is an FTM portfolio. Now, for those of you who have subscribed, if you go look back on all the chatter on the web, on the WhatsApp and everything, you might wonder what is going on. And I think it really makes sense to get back to first principles. I am a strong believer in the power of the machine. I mean, I wouldn't be here if I didn't believe that. But I really think that AI can add an enormous amount to an investor's effectiveness. Okay, and I think, and that is why I want to start with the quote, which is a very famous quote, that nothing in the world is so powerful as an idea whose time has come. Now, I believe this is the time of FTM. Now, I totally recognize in the last 5 weeks, portfolios have had a mixed performance, but I think that almost illustrates the point. I don't think it fundamentally changes anything that I have said before. I still believe it's a very powerful idea. Now, and you have to form your own judgment about it, guys. You don't have to take my word for it. Okay. So what is an FTM portfolio? So these are portfolios created out of, the best signals from InvestorAi. Okay. Just put it here. Yeah. So we take the best signals from InvestorAi and we package them into very small, very efficient portfolios. And these are curated to maximize your upside and minimize your downside risk. How do they work? InvestorAi creates portfolios based on Alpha 330 and value investing algos. Those are the only two algos we use. Once we create the portfolio, we publish the portfolio for you. You can go to the small case site and you can backtest for different periods. If you're satisfied, you can invest any amount you want. And the investment is one click, as is rebalance. Now, of course, some of you have found that rebalance is not such a straightforward process. And some, you need to have money in the account. There are ins and outs. There are various rules that apply. But fundamentally, you don't have to buy stock by stock. You can buy the whole lot at once. So, imperfect as it is actually a very good system. How do we create FTM portfolios? Okay, firstly, we focus on creating alpha. And again, I recognize that those of you who've been investing in the last 5 weeks may wonder about that, but that is the focus of the machine. And there is a very important aspect that I'm going to talk about in a few minutes. We then select the highest probability signals from InvestorAi, and this forms our starting universe of candidate stocks. So that's the first sort of process. The second process I'm going to illustrate with the use of an example from Momentum Portfolio. We exclude what we consider are high-risk stocks, or stocks that have already run up a lot and therefore don't have too much room to grow. So the kind of stocks we will exclude where debt to equity ratio is negative, or it's too much or too high, where 12 months trailing cash flow is negative, where 1 year beta is above the limit, upside to analyst target is below the limit. So, and all these limits that have been set up by the machine and the result of many, many months and years of testing. So there is a whole bunch of criteria that we apply to exclude certain stocks that we think represent too much risk. Then what we do is we do 2 years of back testing. So every stock is tested against the index on 9 criteria. And these are the 9 criteria. They're tested for performance for 2 years. And as you will see, it includes relative returns in the 5 worst weeks of the index. And so we check for a lot of things. We then end up with a smaller cohort of stocks. We run a Monte Carlo simulation for different combinations. We create multiple portfolio options, and then we analyze them for relative performance. Okay, so there is an optimization process that happens. And then we create a final portfolio of 10 stocks, which we publish for your review and analysis. And for Momentum, we do this every week to determine what is the weekly rebalance. The idea is to choose the winners. Okay, so this is how the machine works. So you must understand how it works now, because otherwise we don't want it to be a black box. We want to be able to explain it. What does this give you? It is intended to give you high alpha portfolios that are rigorously tested with regular rebalancing. And these high alpha portfolios are intended to be high alpha portfolios over a period of time. Okay, they're not supposed to be 1 week or 2 week portfolios. That's not what it is. If you're after 1 week returns or 2 weeks returns, then you should go to InvestorAi and look for individual signals. These portfolios, and I have said this before, the compounding of returns is as important as the returns themselves. And if you don't give it time, the compounding, you will lose the effect of compounding. Okay. There is a single monthly subscription, no entry fees, no exit fees, no advisory fees, no management fees. So this is a very cost-effective way of creating a portfolio. But remember, this is a portfolio, guys. This is not an idea or one stock that you have bought and 4 days later you expect to make a little bit of money. You may make a little bit of money, but the idea is to have a portfolio that you can hold and rebalance over time. Okay, so that's the objective. Now let us look at what happened between launch date and today. 9th of August is when we made it open to public, although we have been running it live since 20th of April. Now let us show you what happened. Now, your own portfolio may have performed differently because you may have bought it at a slightly different time, you may have bought it later, you may not have enough money in account, you may have had trouble buying one stock in the portfolio. There are all kinds of operational issues that I'm aware of that can create tracking error between your portfolio and how we track it. But this is how we track it. And it's a consistent way of doing it and therefore an easy way to understand. From 9th of August to 17th of September, okay, it's roughly about 5 weeks, The FTM value portfolio has gone up 4.5%. The index in the meantime has gone up 7.8%. And the index in this case is Nifty 500. So it has not beaten the index. Okay. The FTM momentum portfolio has gone up 1.2%. The NSE small cap portfolio, which I think is a better index to compare it against, went up 3.4%. And again, this portfolio also has not beaten the index. And that will happen from time to time because, there are some weeks it will beat the index, some weeks it will not beat the index. What we really are after is that when it doesn't beat the index, it doesn't underperform by a huge amount. But when it beats the index, it beats the index by a large amount. So in the same period, let us see what has happened. Before I do that, I think you have to view FTM as a long-term investment. This is a very fundamental observation. If you think this is a week-to-week money-making gig, you're wrong, and you won't make money. The chances are you won't, and then you'll actually get very frustrated. Every day it'll move on up and down. You're tracking it every day. It is just not that kind of the kind of product that lends itself well to that. Of course, you can track it every day. Nothing's stopping you from doing that. But you can't lose sight of the fact that this is a long-term investment. From 9th of August to 17th of September, which was a very volatile period in the Indian market, the value portfolio beat the small cap index 2 out of 6 weeks. And the momentum portfolio beat the small cap index 3 out of 6 weeks. And I'm using small cap index in both cases because a number of stocks were small cap in the portfolio, and therefore this feels like a better index to compare it against. Now, I talked about the long-term impact. Now, if I take a slightly longer term view, 20th of April is when we first put the portfolios live on the small case site. And now this gives you a longer sort of run. And it gives you the power of compounding and everything else that I have been talking about. The value portfolio performed 34.1%. The Nifty 500 index for the same period was 25.4%. So in this case, the portfolio is beating the index. Okay. In the FTM momentum portfolio, the portfolio was up 64.9%, whereas the NSE small cap is up 32.4%. Again, so you could argue many ways, but I think the point I want to highlight is that the longer you let the portfolio run, the better chances it has of performance. Okay, if you get frustrated and you leave in 2 weeks or 3 weeks, you're basically booking the losses and not having any opportunity to recover them or make money. Now, with this said, I want to just share some observations with the group. And today, I'm not going to speak for very long, so we'll have more time for Q&A as feels appropriate. So my first observation, one of the observations I want to share is FTM is based on signals generated by the machine. We will never manually alter the output of the machine. Okay, that just won't happen because it then destroys the integrity of what we are doing. So the machine becomes all important. The algorithm becomes all important. Now we have a group in the company within Bridgeweave that we call Algo Oversight and Governance Committee. So think of it as an oversight committee on all the algos. And we meet fortnightly and we look at all the algos, we look at all the configurations, we look at all the settings. We will change the settings of the algo, but that is all we can change. Once we approve the settings and they are frozen, then the output is the output. You have to trust the output. And therefore, my next observation is that all of you, your fundamental question is, do you trust the machine? And I'm not going to tell you to trust it or not trust it. You have to ask yourself. And for those of you who have been using InvestorAI long enough, you will find there is plenty of reason to trust the machine because all of you have made money. All of you have also lost money in some cases, but chances are you made money more often than you have lost money. And I think that is very, very important to remember. And if you don't trust the machine, then you trust yourself, and then please go and go ahead and make your own judgment and your decision. But if you're with FTM, then you must trust the machine. You can't say I don't trust the machine, but I would invest in FTM, and please, when can you generate 5% return for me? That is completely illogical. It's never going to happen. So, questions like, when will AI give me 5% return? I saw this question on one of the forums, chat groups, and I laughed. I said, this is either a rhetorical question, okay, and you're just sort of making a point for the sake of making a point, in which case it doesn't deserve any response, or it indicates a lack of understanding of what FTM is. Okay, FTM is the machine. If you don't trust the machine, don't come into FTM. I'm very categorical here. But if you come in, then trust the machine. Let it happen. Give it time. Okay. And of course, you're free to exit at any time. No one is stopping you. But the whole logic of coming into a machine-generated portfolio is because you think the machine will perform better than otherwise. And then you have to give the machine time, because week to week sort of query is not going to help or not going to change it. So a couple of things that we are thinking about, we are reviewing them actively. So one question that has been asked, and I think it's a fair question, is weekly rebalancing correct? Are we rebalancing too quickly? Okay, so I think it's a very valid question. My team has been looking at this very extensively. We have run many portfolios, one with weekly rebalancing, one with fortnightly rebalancing, one set with monthly rebalancing. And we're looking at all portfolios, how volatile they are, what returns they give, what beta they have, how do they perform versus the index. So that analysis is going on at the moment. And if we feel there is a need to make a change, we will make a change. Okay, so one of the things we are looking at is, the frequency of rebalancing. The second thing that we are looking at is 10 stocks the right number? Because one of our users came to us and said, look, as long as you have 10 stocks, they will be volatile. If you have 15 or 20, then some of that volatility may diminish. And again, it's a good suggestion. It's a fair question. We are reviewing this in different scenarios. So, there are hundreds of portfolios under analysis at the moment. Some have 10 stocks, some have 15 stocks, some have 20 stocks. Some are being rebalanced weekly, some are being rebalanced fortnightly, some are being rebalanced monthly. And so, based on hard data, we will make a determination on what is the right way forward. It may be the same. It may be that we need no changes. It may be that we do need to make some changes. And if we do, we will make that. But like I said, we will change the configuration of the machine. After that, what the machine suggests is what is the output. We will never alter that manually or judgmentally. Okay, so I think that's most of what I wanted to say. My last comment is to go back to some of you who have heard me before, will say that, this is a favorite hobby horse for me. It is. Okay, I genuinely believe this. The real power is not AI. The real power is you and AI. Okay, AI is your Iron Man suit. It will help you fly, but if you're not in it, it's not going to do anything. Okay, it will make you more effective. It will make you more aware and powerful. It will give you ideas that you haven't seen before. It will, but if you don't have a judgment on what you're doing, if you don't have a view on what you're buying or you're selling, you're in the wrong place. Then you should not be doing it. You should be going to IF and getting advice. Okay, so this whole notion of you plus AI is super, super important, and I just want to highlight it once again. Okay, so with that, let me stop sharing my screen, and I'm sure there are many, many questions, and I will be very happy to take them. I have Shailesh with me and Sarthak as well, and they are here to, again, answer any questions you have.
Great. Thanks, Akshay. I think as you went along, Akshay, you've been, answering some of the questions. So what we've actually got is specific to FTM is just about 2 or 3. So let me just start with that. And I think people are slowly, the questions are coming in. I'm going to start with what Subhash has asked us. When you were explaining, he just wanted to, he first asked us, why are none of our portfolios been able to beat the index? But this was while you were going on. So if, when you were in the middle of your presentation, if you want to just talk about that again.
Look, Subhash, we have never claimed that portfolios will beat the index all the time. Okay, there will be moments when we haven't beaten the index. And it is unfortunate that we started on 9th of August. The 9th of August is when the market started to decline. And portfolios have not beaten the index. Again, some of you will see a familiar comment from me. I have never claimed, nor do I claim, that I will always beat the index. Okay, I will just say that probability is high. My obligation as BridgeWeave founder is to give you all the information in a very transparent manner. If you haven't beaten the index, I will tell you we haven't beaten the index. Okay, where we have beaten the index, I will tell you we have beaten the index. So if you go back to 20th of April, which is when we went live, we have beaten the index handsomely. Now, in the last, since 9th of August, when we went live, we have not beaten the index. And that is as transparent as anything else. And can I tell you when I will beat the index? No. Can I guarantee you that you will definitely do better with FTM than anything else? No, I can't. Nobody can. You have to understand the nature of what we are doing. You have to find it that it appeals to you. And if it appeals to you and it makes sense to you, and then use InvestorAi, because you'll see some of the signals. And if you think the machine is doing well, that's when you should come in. Okay, so it's your judgment, completely your judgment.
Great. Shailesh, this is probably for you. One of the things I think somebody wants to know is, can we just show them how they can get into our FTM portfolios? Where do they go? How do they subscribe? How do they
Shailesh, you want to share your
portfolios?
screen and just show it on the small case side?
Yes.
So while Shailesh is doing it, guys, we use a site called Small Case. It's a third-party company, and they have the ability for different people to publish different portfolios. So they have some of their own portfolios. They also have some of the third-party portfolios like ours. So it's a large body of portfolios. So that's where you need to go to. You need to open an account. You need to link your broker, and then with one click you can do what you want. So Shailesh will just show you.
Yeah. So there are 2 ways to get into this. One is either you can go to investorai.smallcase.com, which is a micro site on the Smallcase website itself. So there you can see both our portfolios value and momentum. You can see now, or you can just click on see details, and it just tells you about the small case, historical performance since live, and then you can see how the performance is both live and then simulated backtesting as well. And then if you just
explain click, live, just go slowly, Shailesh. Just explain live, explain backtesting. Show the chart. Yeah. Let's go slowly.
Yeah. So first I'll speak about live. Live is the date when we started publishing our results directly onto Smallcase website as a live basis. So basically they started performance on the real-time tracking, and the same rebalance, same rules that you have been seeing, the same thing we have been updating for since April 20. And you could see that over time there has been the performance is right now being compared against the multi-cap index. And over the last 5 months, the index has gone up, 25%, but the value portfolio has gone up 34%. So that's basically live. Now you can also see for shorter periods, maybe for 1 month. So in the last 1 month, At the beginning, since small caps were correcting and we had a small cap big portfolio, it went down as well. And then if you see, it started bouncing back. As soon as things stabilize, we start outperforming. And last week was a great week for value portfolio, as you could see. So we have caught back up again. Now, this is actually real. So last 5 months is actually real performance. Now, but there is also the same strategy that we have simulated historically as well. So you can just go and give max. So it will actually start from day one, which is 2016 January. So from that day on, you will actually get a daily series of how the portfolios have performed against the index. And if you could see till now, if it had been, it has already given 600% returns compared to just 126% returns from the index. So at each point,
actually,
you can see.
Can I just pause you, Shailesh, for 1 second? So this is my point about long term. Think long term about these portfolios, guys. Don't think 1 week or 2 weeks or 1 month or something. Now, I'm not saying if you hold it for 3 years, you'll get 600%. I mean, you might not. But longer you hold, the better position this product is to deliver the kind of returns that we all want to have. So, sorry, Shailesh, you can.
Yeah, you can also give something called compare ratios. So it basically compares the holdings of the current date and compares it with the index itself. So if you see value index, the P ratio is 7.8, because that's the goal of creating a value index so that it's cheaper historically, right? And so the P ratio is lower, the price to book is lower, and Sharpe is better than the index. So basically, over time, the risk-adjusted returns for the value portfolio is better than the broader index. I could also do the same thing with momentum. I'll just click now. You could see the same things. I'll go to live again. As you could see, we went live around August 4th or August 6th. And the SEBI circular came out, and more than just even the indices, the momentum securities that were all been running up, that were all part of our portfolio, took a huge beating because of the news flow. And though the broader markets didn't actually come down, the small cap indices came down a lot. And since we were holding it, 8%, the small cap index went down, and we also went down along with it, same 8%. And then from that period on, which is about August 20th or August 18th, we have August 25th or something was the day when it started reversing. From that day on, again, the small cap indices started outperforming the broader market, and we have kept the allocation to small cap except 1 week, and that's how it has moved. If I look at the last 1 month, so as you see, the small cap indices, we matched the index performance on the downside. We never fell more than the index. Only during 1 week, we actually moved the algo picked some large caps over small caps. And that's why when the small cap index went up, we didn't go up as much. And then again, last week, we picked small caps, and last week was a great week. From index went up almost nothing, and it went up 2%, and we went up like 4%. So there was another 2% outperformance last week. So as Akshaya said, it's all about time. There would be temporary underperformances, but over time, we believe and we hope that it would do, but there is no guarantee that it will. We just believe because the strategy has been backtested. Even if you look at the max button here, this strategy has been backtested since September 9, 2019, and it has generated extraordinary returns over time. Even when I give, you look at the numbers, it's 379% versus 96% from the small cap index. If I give live, you could see even just 5 months. Yeah. Now, there's one more thing I want to speak about as well. Momentum is itself a strategy. It covers a section of the securities out there in the market. It will not try to cover value, and value again is very value centric. It's not necessarily momentum centric. So they're not completely broad portfolios like 40, 50 or 100 securities, and that's why there would be days of outperformance and days of underperformance, but each strategy will have its own day in the sun, and that's where we believe that we will extract the maximum out of it. And if you look at some of our competitors on momentum in small case as well, they have fallen even more than we have, and they have not even bounced back as much as we have. So it's been a rough time for the last 1.5 months across all momentum strategies. The only guys who have made money are ones who have put money in index. But those who have put money in equity index funds or large cap funds, the first 4 months, they made no returns at all. The market was just trending, and that time we went up 30%. So everyone has a time. Every sort of sector, every sort of style, every sort of strategy has a time, and we just need to wait and ensure it give a long time so that it plays out and reap the benefits of it.
Thank you, Shailesh. You can stop sharing.
Great. So we have Kunal and Karthik's questions, but I'm going to start with Karthik and then I'm going to come back to Kunal's. Karthik asks us, I wanted to understand the underlying strategy of the FTM portfolio. Since you said there are 10 stocks, is the overall strategy a long only or includes short or holding out cash?
Yeah. Sorry, Andresh.
No, I'm just going to say, Karthik, it's long only. It is always long only because remember, all the execution takes place in your own brokerage account. We don't execute anything for you. Okay, we don't manage any money for you. We're not buying or selling anything on your behalf. You're buying things or selling things. So if we were to come up with a long short strategy, which we can, then all of you will have to make short trades, which are not very easy in India, So it just execution of that strategy becomes very complicated. And that is why it is only a long strategy. It's long only.
Yeah, just to add a little more color to it, we don't even at this moment, for example, hey, if you think the markets are volatile and move it to cash, we don't do it as a strategy because one, that's not what we have tested the model on. That's not what we have told how the model is built to our subscribers. B, that's an even more subjective call. For example, if you had gone to the 3rd week of August, where the small cap indices were down 9% and the large cap indices were actually up 2% in just 3-week period. And people said, hey, we are picking too many small caps. Let's go to large caps or let's move to cash because it's looking too risky. If we had done that, we would have even 4 or 5%, even lesser returns than we had now. So there is no point holding all the way down and then moving to cash, because obviously the best way would be to figure out if you have to move to cash, but then you are paying us money, you're paying subscription, and if we are building portfolios just to put it all in cash, then is there considerable value add from us as well? So the goal is that we've told that we'll be investing in the market. This is not an asset allocation strategy, it's a stock selection strategy. An asset allocation strategy, which would be a different FTM that we will come out someday, that will have decisions based on whether you should move to cash, whether you should move to bonds. And that's a complete different paradigm. And trust me, it's an even bigger decision and making thing than picking stocks.
Yeah. And just to complete what Shailesh was saying, so you have to remember, we are not managing this money. We are not managing your portfolio. We are not investment managers. We're not advisors. There is no judgment that we exercise. Okay, none whatsoever. Our only judgment is setting the machine to run the way we think it should run. But once it runs and it produces a certain output, nobody has any discretion. Okay, we will follow the machine, as will you. And that is why it is so important for you to believe in your heart that you trust the machine. If you don't trust the machine, do not come to FTM. Okay, so this whole thing of can we go in cash, can we add more small cap, large cap, etc., etc. No, we are not investment managers. We are not. The machine is managing this portfolio. It is a portfolio that has been picked by the machine. You can follow it or you can not follow it. There is no third choice.
Okay. Follow the machine, trust the machine. Okay. Kunal has a question. If we are buying for a week, I feel technical analysis must be technical analysis is important. He says that 2 members had informed him that the technical analysis can be better. So Shailesh, do you want to just comment on that one?
Yeah.
I actually don't understand that question at all, but anyway.
I think I got it. So basically what he's saying is we should be doing technical analysis, and 2 of members said that the chosen stocks did not show technical breakouts. The way I believe you're referring to Alpha 330, and Alpha 330 is the algo itself is based on about 300 features, out of which about 170 are just technical features. Now, what happens is, and the reason why we do not, why we do AI and a machine learning way of doing it is not each indicator and breakout is easily readable. Now, what do I mean by that? If you just look at Zerodha's chart program, you'll see some 180 indicators. Okay. Eventually, if you look hard enough, some will give bullish, some will give bearish. So just because someone would know 5 or 10 indicators, they can say, hey, this is bullish, this is bearish. And that's why we use the machine to do it. Let the machine pick based on all the indicators what is the better one. So yes, maybe using 2 or 3 indicators, it may not have given good signals, but there would be some other indicator that would have given the good signals. And that's where the whole machine trusting comes on, because the same algo has been running for so long and it has been able to pick securities at a remarkable accuracy and returns deliverance level. So we believe that it would continue as is.
Yeah, and just to add, Kunal, your question opens with saying if we are buying for a week. So I'm not sure if you're buying a stock, then it's fine. You can buy it for a week at that kind of time frame. If you're buying FTM, then please don't buy for a week. It won't work. I also, Shruti, I want to pick up a small point from Jasmeet. He's saying, can we get training from scratch for a beginner level? Jasmeet, yes, you can. There are lots of videos, that we have. Prabal, will you just reach out to Jasmeet offline and point him to some of our InvestorAi Academy videos? It will take a little bit of time, Jasmeet, but training does take a little bit of time. So I hope that will help you.
No, great point, Akshay. So to Jasmeet, I was going to come towards the end because he also had a lot of questions on InvestorAi specifically. So I wanted to just tell everyone here, that.
I think today is not an InvestorAi session, but
that was the only.
You will see lots of videos on this.
Milind has one question, and Shailesh, that's one for you. He wants to know specifically for FTM portfolios, from where do we get capital gain reports for paying tax?
Yeah, small case doesn't provide it. However, the way the entire structure is put in place is that the shares are bought from your own demat and trading account. So wherever you get other investments, whatever capital gains statement, tax report statements, this will be part of that itself. It won't be specifically separated out, but it would be available in the same report. So if your broker or a trading partner is actually a full service broker, I think now even the startup brokers have actually started getting into giving out tax reports. You can directly go there and it should be available there.
Yeah. Shruti, shall we take just one more and close it?
Yeah, no, Akshay, we are actually done. That was, yeah, because the others are kind of a repeat. So
I'm conscious of time.
No, and also some are a repeat. Jasmeet, that's a good question you've asked. So let me just quickly recap how this whole thing works. So Jasmeet's just asked us if we have a referral discount. So Jasmeet, that for InvestorAi, we've got great discounts running. In fact, we're opening with discounts. You may have seen an email, come to you. We have opened out a monthly discount as well for the very first time. Monthly and quarterly are at 15% discount, everyone. So if you are thinking about, upgrading from what you had, then you could look at InvestorAi discounts as well. Now for FTM, whatever you're seeing right now, because we've already discounted the FTM subscriptions. So what you saw on the small case side, those are our prices at the moment. And on referral, we have a great referral program that's running, and many of you have referred a lot of people to us. It's for InvestorAi at the moment, and that discount continues. It's 15% off for whoever you're referring, and you actually get 1,000 and 2,500 rupees for a quarterly and annual per person that you actually refer.
I think FTM also there is a discount on the quarterly.
It's already discounted.
It's already there.
Akshay, that's what. It's a big discount, and it's already discounted, and it's up there. You're right, Akshay. That's already there. Everyone, the big one that we wanted to actually talk to you all about, and this is about, we have our community and we're on WhatsApp and Telegram. What we've actually done is we've got you another platform which you can get into and talk and get peer learning and ask questions directly from the InvestorAi app. And we know, because we've seen about 1,000 people just come in and sign up just last week. You've checked out the community, so thank you for that. But now we would like you to have more action on that community space, and you will see a lot of discussions happening there. We would like to slowly sunset the groups that we are on, and we'd like everyone to just use one place. You come into the app, you click on community, talk to us there. The discussions are there, and we think that you will enjoy that more, and you will learn more in that space. So the link is up there on your screen right now, the community link. For all those who are not InvestorAi registered users, you will need to do that first to come into the community. But we have a place for FTM portfolio specifically. There is a category. So please come in there. Please ask questions. You would have also seen an FTM newsletter that came to you. That was our very first newsletter for August. The update, we kept it very specific to August so that you understand how the portfolio did. You will see a similar one end of September. And all of that information is again available for you on the community. So we hope to see you there, and have good discussions over there. And you can pitch into, and you can answer, and it's a great way to even search for things that you're looking for. So with that, thank you very much. We hope to see you all next week. We're going to be talking about investing in international markets next week. You all have asked us how you can use InvestorAi and look at markets beyond India. And so we're going to talk about that, how to do it, where to do it, how to go about it. So we hope to see you next week, 12:30 on a Saturday. So thank you, everyone. And Prabal, can you put up that question, please? The last one on how useful the webinar was, please. Okay, everyone. Thank you. Really delighted to be back, and see you next week. Thank you, everyone.
Thank you.